Hello everybody, how are you? Welcome to my channel, The Technical Analysis of Financial Product. My name is Tapus Kumar Basu. Through this channel today, I have decided to explain you a very important indicators, which is known as the Elliot Waves, and this is a very popular indicators, and a lot of people are using particular these indicators. And I will explain you very elaborately by plotting this indicator how you can do the buying and selling decisions, right? So now, without wasting any time, let me straight away go to the daily candlestick chart. So you can choose any stocks chart or any index chart. I personally chosen index chart, Nifty chart I have chosen over here. You know that those who are the short-term traders, they can also plot particular this indicator in daily chart. And those who are the intraday traders, they can also plot in 15 minutes chart. Those who are a mid-term trader, they can also plot is in a weekly chart. Now this is the daily candlestick chart of Nifty. So now already I have plotted the Elliott waves. Just to remember, Elliott waves generally moves in the market 5:3 ratio. Right. So so now already first ratio I have already plotted. How it has been plotted? Nothing. Here is a trend line here. Just you have to click over here, and from here to you have to drag this way. So this is the way you can plot the that's particular this wave, right? So fast impulsive has already been plotted, right? So after the completion of the fast impulsive wave, so how did you came to conclusion that the fast impulsive has completed? As because you see there is a one bullish candle, after that there is a gap up, so it means the end of the first impulsive wave. Now it is that the second corrective has yet been started. From there, what you can do it, so just so what would be the then retracement level of the second corrective wave? The retracement level of the second corrective way is the 100% of the fast impulsive way. Just to find out this retracement level, we have to take the help of another indicator, which is known as the Fibonacci retracement. It means I have to plot the Fibonacci retracement on this chart to find out the retracement level of second corrective waves, right? So we have to go to the Fibonacci retracement zone. From there to we have to plot this particular, just I plotted over here. You see then what is the 38.2% of first impulsive waves? This is the 38.2% of first impulsive wave. It has already been crossed the 38.2% of first impulsive wave. If anybody would have taken the position over here, he would have booked the profit over here, but it should retrace at least up to 61.8%. But there is no need to wait for the 61.8%. For the safer side, it's better to book the profit over here. But if anybody is more bullish, then they can wait by putting a stop loss over here, and then on that case there will be little chances of incurring a losses over here, right? Now so now this is this particular point is a very vital point, and this is the end point of the second corrective phase. How can I came to know, how can I determine I that this is the end point of second corrective phase? By considering the pattern of candlestick. You know, candlestick pattern generally plays a very vital role in the market, and the you know for while taking the buying and selling decision. This generally plays a very vital role. I have decided to explain some candlestick pattern in my next video. Right now, first let me draw the second corrective waves first. So again, the same way I have to draw the second corrective waves. Just I drawn the second corrective waves over here. Right. You see, this is the red candle. That is a green candle. This is a bearish candle. This is a bullish candle. Why it is bearish candle? Because the closer is because the closer is lower than the closer is higher than the lower. That's why it's a bearish candle. Right. So this candle has appeared in such a fashion as if it has engulfed the very previous candle. So it means this is technically called the bearish engulfing pattern. If we see there is a kind of a pattern has appeared in the uptrend, you see this is a complete uptrend. There is a appearance of any bearish engulfing pattern, which generally indicates the bearish reversal. So this same way it came down, the market came down very heavily, right? So what would be the retracement level? If anybody would have short the product, that what would be the profit zone? So firstly I'll have to find out the retracement level of the third impulsive way. So what will be the retracement level of third impulsive way? The either it should retrace 100% or 161.8% of first impulsive way. For that we have to take a help of another indicator, same, that is the Fibonacci retracement. We have to plot the Fibonacci retracement zone. Now already we have plotted the Fibonacci retracement zone over here. So now what is the 161.8% of of fast impulsive way. The 161.8% of fast impulsive way. It means you have to take a measurement from here to here, and accordingly you have to take a measurement from the same measurement. You have to put the same measurement. Then you can easily find out the 161.8%. So now let me draw the first third impulsive way. Then you can easily understand. So let me draw. This is the way I am drawing the third impulsive way. The third impulsive, always you remember the second corrective way should be lesser than the first impulsive way, and third impulsive way should be greater than the first impulsive way. You see, the third impulsive way is greater than the first impulsive way, and second corrective wave is lesser than the first impulsive way. This is you see, this is a third corrective impulsive waves, right? These are 161%. This is around 161%. So if anybody anybody would have any short the product over here, he could have booked the profit over here. But instead of waiting for the 161.8%, better to book the profit of 100%, right? Right. So this is as far as the third corrective wave is concerned. After completing the third corrective wave, you see there is a one kind of pattern also. The why you are coming into conclusion this is the end point of the third corrective wave, considering the same pattern of the candle. You see there is a doji star. After the doji star, we saw there is a gap up. There is a big bullish candle. It means that there is the end of third impulsive wave. Now the fourth corrective wave is about to start. So now what would be the retracement level of the fourth corrective wave? The retracement level of fourth corrective wave, either it should generally start from 14.6% to 61.8% of third impulsive way. Now we have to take the help of Fibonacci retracement. Again, we have to plot the Fibonacci retracement zone on third impulsive way. So now I am plotting that this is the starting point, this is the ending point. Now how much it retraces? You see it already crossed the 38.2%. So it should retrace 14.6% to 61.8%. So it has already been crossed the 38.2%. So this is the way. So if anybody would have taken the position over here, he could have booked the profit of around in 38.2%. So this is the way trader can book the profit. This is the way trader can buy and sell. From here, the trader can short the product, can book the profit. Here, say trader can take the position, book the profit over here. So now this is the fifth. So 38.2% would be the fifth. So what would be the retracement level of fourth wave, that is at 14.6% to 61.8% of third impulsive way. So this is a 61.8%, but it didn't didn't move to 61.8%, but it only retraced up to 38.2%. Either it may retrace 38.2% or 50% or 61.8%. From any point it may retrace that for next fifth impulsive may start. So it only retraces over here, then it retraces up to over here, then again came down. Why? Again we came to understand considering the pattern of candle. You see there is a bearish candle, there is another bearish candle. It means the market is going to come down. So it means the fifth impulsive is about to start. So let me plot the first, fourth, uh, fourth corrective wave. This is the fourth corrective wave. This is the starting point of the fourth corrective wave. This is the ending point of the fourth corrective wave. So now next one would be the fifth impulsive wave. So what would be the retracement level of fifth impulsive wave? The retracement level of fifth impulsive wave would be how much? Then either it is 100% of wave 1, either it should be the 100% of wave 1, it should retrace 100% of wave 1, or or it retraces 23.6% to 61.8% of wave 4. Now let me again plot the Fibonacci retracement to find out the retracement level, right? From here, so we have to find out the retracement level from here. So this is the fourth wave, fifth wave has started. So it may come up to 50% or 61.8% or 100% or more than 100%. It has already reached 1 minute. It has no, sorry. Let me plot once more. 1 minute. Let me plot once more so that it will be very easier to understand. Then let me plot, right? Let me erase this one first. Okay, thus let me erase this one first. uh, okay, now you see Now already I have plotted the fifth impulsive wave. So now this is the fifth impulsive wave. This is the fourth. This is the fourth. This is the sorry. Fourth corrective was already plotted. Now from here, consider having seen the pattern of the candlestick, that this should be the ending point of the fourth corrective waves, because there is a one negative candle, again there is another bearish candle, it means it's coming down. So what would be the retracement level of fifth impulsive way? The fifth impulsive way, it should be 23.6% to 61.8% of fourth corrective waves. So again you have to plot the Fibonacci retracement, so that we can easily understand that this, right? So I'm plotting the Fibonacci retracement over here. So now this is the Fibonacci retracement. Okay, now plotted, it should 23.6% to 61.8% of fourth corrective waves. You see, it has already touched the cross the 61.8%. So now let me draw the fifth impulsive wave from here. The fifth impulsive wave, has already been completed. So if anybody would have short the product or short the product particular 23.6% level, he could have booked the profit of 38.2% or 50%. So this is the way trader can utilize the Elliot waves, right? Buying and selling can do through with the help of particular this indicator. Very useful indicator. So end of the fifth waves. After the end of the fifth wave, then there are last three waves which are known as a corrective waves. The now first corrective waves has already been started. This is A, but it has yet not been completed. What would be the retracement level of A? The retracement level of A should be the 50% to 161.8% of 161.8, up to 50% to 161.8% of fifth fifth impulsive way. You know that there is a big bullish candle, so then another gap up. So we can easily say that fifth impulsive, the end of the fifth impulsive way. Now the first corrective way is yet to start, because there are three corrective waves need to be completed after the fifth waves. So A B, that will be marked as A, B, and C. I mean first corrective way, A has already been started. So what would be the level of the first corrective waves? That the first corrective I would level up the 50% to 161.8% of this fifth impulsive way. Now again we have to take the help from Fibonacci retracement. You see, I am taking the Fibonacci retracement. This is the starting point and this is the ending point, right? So what would be this? So from there, if I do it, so now I'm plotting over here. So now the A has already been 100%. It should retrace up to 161.8%. So we have to wait for the next day. If we see there is a bearish candle again, next day we see there is a bearish candle, then we can expect the end of the end of this corrective wave. So so three corrective. So 5:3 ratio. 5 ratio has completed. Last 3 ratio has yet started. Out of last three ratio, first corrective has already been started, and the rest two ratio has yet to be started, but it has yet not been started. In the next video, I explain you the next two ratio, right? So this is as far as Elliott waves are concerned. So to be very honestly, I'm telling you, this channel is purely for educational purpose. This channel doesn't suggest for any kinds of stock tips or stock trading. But anybody would like to do any kinds of trading, request you to please first do consult with your own respective investment advisor. After that, you can take your own decision, because this channel is not responsible for any kinds of buying and selling, right? Selling decision. And anybody would like to join my Telegram channel also. So already in description I have given the link of the Telegram channel. You can easily join. Apart from it also, if you are interested to work with me, you can also work with me. For that, you have to get in touch with me through my numbers. My WhatsApp number has already been given in this description box. And also I would request everyone, please do share this channel, and also to subscribe this channel, and also to share this channel to your near and dear ones, because the more responses if I get for all of you guys, so definitely it will encourage me to bring lot more videos in near future. And if you'd like to put any kinds of comment, you can also put your comments also. So by saying this, I'm going to sign up today's program. Thank you very much and have a great day.